we are going to be talking Tesla, everyone's favorite controversial company led by everyone's favorite, almost everyone's favorite controversial CEO, or at least they enjoy talking about it. So, Simon, I'm not going to beat around the bush here. Let's talk Tesla. You've spent the last few weeks on our Discord forum going through the ins and outs of what we are doing a discounted cash flow model. Before we get into the results here on Tesla, let's briefly go through for those who aren't aware or maybe need a little refresher on their basic economics. What is a discounted cash flow model and why is it important or why do investors use it?
Absolutely, JT. I'm kind of excited about this show because we're going to be quantifying a lot of what Tesla's value creation is worth. To answer your question, a discounted cash flow is a way that you can kind of quantify the future cash flows that the company would produce, bring them back to the present, and at the end of all of it, what is a dollars per share price that investors should pay based on the performance of Tesla as a business? So, shoot, man, for the last 2 weeks, I've been in social isolation, but I've got some pretty good numbers in place here for what Tesla's worth as a stock investment for us as investors.
Now, I got to say, we did this a little bit on purpose because we knew it would be a bit of a lightning rod. And it has been so far because Tesla, people dispute not only what Tesla should be valued, but what Tesla is. All the way up to Elon Musk, the CEO, gets asked, what is this company? And so that was a very key part of what you sought out to define when doing this DCF is, well, when we define what a dollar's worth of Tesla is worth, we have to define Tesla first. So how did you do that?
Yeah, it's a good question because, I looked at Tesla in kind of two different pieces. One, Tesla as the car company, and two, the other ventures that Elon Musk is taking Tesla into its future. And it's very, very interesting results when you frame it that way, because from the start, Elon and pretty much a lot of investors knew that the car business was not super attractive as an industry, right? It was really expensive to build all the factories. You had to compete on price. Most people couldn't pay an infinite amount for a car. And so, Tesla as a car company, which we're going to be discussing in this podcast here today, is constrained by a lot of those elements, right? The inputs are not as exciting and sexy as a lot of investors would even want to get involved with. And the second part of it is why Tesla is different from other automakers. Why is investing in Tesla different than investing in Ford or GM or any of these other, companies that have broken the mass market as a car maker? But Tesla has got so many interesting new projects, full self-driving, full autonomous Robotaxi network. A lot of these things that Elon has been spending hefty sums of money to develop the neural networks and to train, using some of the most complex computing infrastructure that's available in the market. Why is he doing that? Well, because the reward of Tesla being more than just a car company is so great and so lucrative for us as investors. So in part two, we look at what Tesla's worth, not the car company. The sum of those two parts is really what the investment is worth.
So let's go through the car company first. Do you want to just go through briefly for folks who maybe aren't familiar with Tesla, the car company right now, where they'd get the lion's share of their vehicle sales from?
Yeah, absolutely. And this was something that I think kind of rubbed the nerve, of a lot of Tesla investors when I put this out there, JT, because, I did publish on our 7investing.com homepage on our website that, I thought that just to jump right to the punchline, I think Tesla, the car company, is worth about $104 a share. And, every discounted cash flow is only as good as the assumptions that are made. And so I kind of meticulously crafted out line item by line item, what is Tesla selling today? How quickly did it ramp up its previous models, the Model S, the Model 3, the Model Y, and then how fast is it going to ramp up its upcoming model? The Cybertruck right now is kind of what's in the production mode. We've just rolled out the first couple thousand from Austin, from your backyard there, JT. Gigafactory Texas has kind of been where Tesla's been investing its money. And then I think that within the next couple of years, specifically by 2027, is when we'll really start going to see it going full steam ahead into creating this mass market vehicle, which is the Model 2 is what it's being dubbed. This is the one that's going to be $25,000, if not $30,000 to start. This is kind of the price point that's putting it right out there next to the Honda Accord, right out there next to the Toyota Camry. But something that those vehicles do not offer, which Tesla is going to be offering, is full self-driving autonomy, right? You push the button, you put in the address of where you want to go. And if you buy a car for $25,000 to get you there without you even having to step on the that by itself is truly amazing. But even more amazing is going to be the Robotaxi network, where this can be a business venture for you. You can buy a car and send it out there to compete with Uber, people up and giving them rides and just collecting checks with deposits into your bank account every day. That's why this is so truly unique and different than what any other car company has done. But to get back to answering your existing question, the value behind the $104 per share number for the car company side of this is just how quickly can Tesla spin up gigafactories, how quickly it can introduce its Cybertruck and its Model 2, and how much is it going to cost, not only for the capital component of that, but the operating expenses that are tied to that. You put together sum of all those parts, you get future cash flows. We discount those back to the present. $104 a share is what the value.
And that statement right there that you just made is so valuable, I think, to people who are looking into Tesla and the conversation around Tesla, right? Because even in talking about the $104 a share, it took so much discipline on your part not to start going into full self-driving or robo-taxis or fleet vehicles or all these other things that are possible Optimus, right? All these other things that Tesla is in the process of. And that's where a lot of the excitement is. I really appreciate how when you did this, you're like, all right, hold on. Let's look at what they are, right? And figure out a valuation for what they are. And then we'll look at what they could be. Now, I know a lot of people were upset that what they are was, I think Tesla's trading at like 174 today, right? So I think, they're like, oh, wow, this is significantly, the share price is significantly, baked in a lot of these potential moonshots on top of what they're already doing. But, as a Tesla shareholder myself, full disclosure, I actually was more relieved that it was already at 104, just with what they're already doing. I think, without getting into too much, I think Cybertruck has not gone as well as it could have. And a lot of that is like unforced errors by Elon and in the rollout. But even notwithstanding, they're still already at 104, right? So with all that baked in, all they have to do is hit a couple singles or one home run on all these big, exciting things that they're doing. And they're going to hit that 174 and then some, is how I think. And hang on just a sec. I see that Simon no longer with us. Let's see if he hops back in.
Have you ever actually thought about all the fees you're paying to trade option? Aside from the regulatory fees, there are commission, and most platforms charge per contract fees too. That's what makes today's sponsor, Public.com, so interesting. Public doesn't charge commissions or per contract fee. And in industry first, they offer a rebate of up to 18 per option contract that is traded. If you trade 1,000 option contracts on Public, you'll get up to $180 in direct rebates. If you trade 10,000 contracts, you can earn almost $2,000. And more importantly, the rebate means you can maximize your profit and minimize your loss. So to recap, no commission, no per contract fees, and up to 18 cents on every contract traded. EY NerdWallet recently awarded Public 5 stars on option traded. Start earning up to 18 cents per contract traded. Only Public.com. A disclosure that this was paid for by Public Investing. Options are not suitable for all investors and carry significant risk. NerdWallet has an overall rating of 4 points out of 5 as of April 2024. Full disclosures are included in our podcast description for U.S. members only.
Welcome back to 7 Investing. Before the break, we were talking about our DCF model for Tesla, which we've split into a couple of different parts. The first part was on Tesla as a car company, and Simon dropped the bombshell that While Tesla is currently trading at 174 and change, right now our DCF model has the car company Tesla valued at about $104 and change. But as we've all heard, Tesla is more than a car company. So I want to talk briefly. I know we only have a few minutes, but I want to tease out where we go from here, Simon, because this is a DCF that's not quite done yet, right? I mean, we have our Tesla, the car company DCF, but there's still more to talk about with Tesla here.
I pardon the question here, JT, but I did have some technical difficulties on the last recording. Apologies for anyone who was influenced or affected by that. How far did we get? Did we talk about the kind of the forecast for the models and the Cybertruck and the Model 2?
Yeah, we were in there when things started to break down, but we had gotten pretty much to the idea that there was going to be a Model 2. There's going to be a simpler and more democratic Tesla, and that was going to add in some, and there was also going to be Cybertruck, which is going to ramp up. And then you had talked about, we didn't quite get to commercial. You want to finish that up real fast?
Yeah, and apologies again for anyone listening. I had to deal with my technical difficulties I was experiencing over here. But the point is that Tesla is very methodical. Elon Musk is a very smart guy. He ramps things up in larger and larger quantities, and is kind of guided by this master plan, he calls it, of weaning the world off of fossil fuels and getting them into electric vehicles and more sustainable form of energy. And so what we saw, from originally the Roadster, then to the Model S, produced in Fremont, and then to the Model 3 that was produced in Fremont and in Shanghai, and then the Model Y that was ramped up in Berlin, and then also in Austin, Texas. And then now we're going to have another ramp up of the Model 3, even more production in Shanghai, and this new Model 2, this mass market available car, initially is going to be coming out of Austin, probably Shanghai later on as well. But what Tesla's doing is it's very, very wisely putting the capital investment up front to produce the vehicles, to get as many as it possibly can onto the road. And then it's not only going to monetize the sales of those vehicles that it collects up front, but it's going to collect recurring revenues from the full self-driving software, from the Robotaxi network of autonomous ride-hailing. I mean, the more cars you can sell as cheap as you possibly can, Elon doesn't just want to collect $35,000 or $25,000 up front from the sale of a mass market vehicle. He wants to collect high margin, ongoing, collecting, recurring revenue, just like a SaaS company, just like a software as a service company where we've gotten used to. That's why Tesla is so intriguing as an investment. And so quantifying it in terms of investors, I look at this objectively. I'm not just hoorah about Tesla overall, but when you look at the margin, heavy capital expenses that Tesla has to pay for factories and all the people, that work on the lines of production, and the gross margins that are only around 20% today for a car that's being sold out. A lot of people are saying, yeah, this really isn't work, but Tesla's just another GM, just another Ford. You're never going to make a ton of money off. Coupled with part 2 of the podcast, which we'll film later on this week, of looking how much more attractive it looks when you can collect $100 a month from people for full self-driving, or we can collect a fee per mile for people to do the ride hailing that then falls right back to Tesla. It's made possible by the autonomous driving of the cars. I mean, that's where the long-term vision is. It just costs a ton of money and a lot of innovation to do that. But a lot of existing automakers simply don't have the time nor the resources to do. So, Taylor, two Teslas, JT, you've got the expensive capital intensive Tesla today of being an automaker versus the more Tesla as a software company that we're going to start seeing in the next couple of years as rolls out the autonomous software and the model.
Well, and you're still just talking about Tesla as a car company. There's an entire other wing of Tesla as an AI and robotics company, which has made headlines recently because Elon has essentially come out on X and confirmed that he's only going to be pushing this if he gets his 25% of the company vote, which is coming up here in the next few months. So that's going to be something that if you're interested in investing in Tesla, you're definitely going to be watching the news over the next 2 months over how shareholders vote. And if they, appease Elon's demands with this company, which puts some shareholders in a kind of moral quandary. But if that happens, you've got an AI company. Also, look at Tesla's ability to have its supercharger network, which again, They fired the supercharger network and they rehired them. And, but there's all these things where if it pans out, you could have a situation where you've got all of the charging capabilities of an Exxon or an energy company, which Tesla very easily could morph into. You could have all of the tech components of an AMD or a high quality Microsoft AI company, or when it relates to AI, ChatGPT or something like that. You could have the labor force and manufacturing component of building these Optimuses and building factories for other people. There's all sorts of futures for Tesla, and it's not like this is all just stuff that's made up. These are verticals they're actively pushing. So it's going to be real interesting as you go through to try and suss out what's real and what's real in quotation marks, right? Because this is all very forward looking. But what is something that could happen versus something that's really out there? And you almost have to assign a probability to a DCF for Tesla because so much of it is so far in the future.
We haven't even talked about energy, right? There's now Powerwall, battery storage packs out there, and, solar panels going on residential roofs and even commercial business roofs, and even an industrial scale for power production that Tesla is not only manufacturing, but designing and selling as well. The question we always come back to, though, which is why this is so unique from a lot of different content that's published about Tesla, is the question I'm ultimately trying to answer for investors is, should I buy this? What does all this matter? You can tell the story about how exciting it is about the battery business and the energy business, but at the end of the day, even if I have really optimistic, bullish assumptions that I put in, a number crunch and everything, it's probably worth about somewhere between $30 and $50 a share of upside, even if everything goes well in the energy. That's great, but that's not really moving the needle for shareholder, JT. But when you look at, if there's really is 100 million Teslas on the road cumulatively by the year 2040, and all of them are racking up, dollars per mile through this Robotaxi network that's fallen right to Tesla's bottom line. Holy cow. That is a really big needle mover for the investors in this. We frame this all, not only in terms of, Tesla's complex, there's a lot of moving parts. Literally, they could do anything. They could sell cars. They could sell tequila and flamethrowers, which Elon's the food for. But at the end of the day, what does all this matter? What is the magnitude of the impact? That's why it's been such an interesting exercise of doing this through the lens of a DCF. And we're publishing all of it for free to 7investing.com, which is my own social isolation for several weeks for your benefit to see, how are these going to move the needle? And then we're sharing all of them directly in the community forum, which JT, you did a fantastic job setting up this Discord community forum for 7 Investing, which gives us a way to 24/7 talk about stocks, including Tesla, and ask questions about the input and the assumptions into something like this. This is not a one-way publishing model. This is a two-way interactive, empowering of individual investors to talk about things. Pretty exciting to see all the things we're doing at 7 Investing right now.
But thank you, man. I appreciate that. And since you tooted my horn, I'll return the favor. I know you're a humble guy, but the work that you've put into these DCFs over the past few months is just nothing short of astounding. And so I know I've gotten a lot of feedback from subscribers who have said, this alone, not even the fact that we're doing monthly recommendations that we've created the forum, but these DCFs alone are worth the price of admission. So, if you got value out of this podcast, out of the Tesla DCF model, out of any of these DCFs or out of our monthly product, please support 7 Investing with your monthly or annual subscription. You guys are the ones who keep the lights on here. And so the more subscribers we get, the more resources we have to go out and do this with more companies. So thank you for all of our subscribers who have been so loyal to us. We have subscribers who have been with us since, month one when we opened the doors, back in 2020 and have stayed with us, to this day. And we think that's because of the value of the product we provide. But we can only provide it if we have subscribers. So please reach out, join us. You can get your first week for just $1 that gives you access to every piece of research we've ever done on every company we've ever recommended for $1, which is why a lot of people say that we are the best value in an investing subscription service. So with that, Simon, speaking of keeping the lights on, I believe we have something else we'd like to say, and I'm going to turn it back over to you.
Just one more sponsored read. We did want to recognize and thank our partner, Public Investing, for this. Earlier in the show, you did hear us talk about the investing platform, public.com. That's where you can trade options with no commissions or per contract fee. You get a rebate of up to 18 cents per contract traded. NerdWallet recently gave Public 5 out of 5 stars for options trading. If you want to see why, go to public.com. Start getting a rebate of up to 18 cents per contract traded. A disclosure: this was paid for by Public Investing. Options are not suitable for all investors and carry significant risk. NerdWallet has an overall rating of 4.6 out of 5 as of April 2024, and the full disclosures are in the podcast description. This is for U.S. members only. JT, kind of complements perfectly for us. Those option traders might want to take a look at Tesla option or buying and selling this stock. We're here to empower those investors to make better decisions. Tesla, certainly a battleground. People love it or hate it, but let's objectively look at the numbers. It's been a lot of fun kind of digging into this valuation.
And I've certainly have trades that have made less than 18 cents. So I appreciate Public for using the burn on some of those. Every little bit helps. So if you want to stay tuned and catch this, like Simon said earlier in this podcast, this is the first DCF Tesla podcast that we're going to have. It's not going to be the last. There's a lot going on with this company. As we teased out earlier, there's a big shareholder vote coming up in June. So there's definitely going to be more Tesla talk from the 7 Investing podcast moving forward. If you want to be a part of that, hit like, hit subscribe. Make sure you get all those podcasts on your podcast platform of choice. And with that, for Simon Erickson, I'm JT Street saying thank you so much for listening to the 7 Investing podcast. And we empower you to invest in your future. Thanks so much for joining us.